What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC and GME update to bring all of you this evening. So what we're going to be covering in this update is a little bit of the technicals that we were seeing on some of the longer timeframes today. We were seeing some very interesting things happen, and along with this, we do have to go over the craziness that we are seeing on Ortex. We again have another day of all-time high shares on loan, short interest going up. GME's cost to borrow is going over 300% at the current time, and today, with the rising cost to borrow, with the amount of shares that have been going out on loan, with the utilization that we've been seeing, the perceived utilization that we've been seeing over the last couple of, honestly, months at this point, there's a high potential that some of these shares are being forcibly recalled. So we're going to go over that as well. We also have to take a quick look at the option chain and the potential for a gamma squeeze coming up. And one very, very large hedge fund has gotten their buy button taken away. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, guys, you have seen the amount of success that people have been having with the 1348 trading strategy, the over 450 stocks alerted, the proprietary trading algorithms, all the private live streams. If you guys do want a little sneak peek access to that, make sure you check out that link down below. If you sign up now, you won't get charged until the beginning of the month, so you get a little bit of a grace period. So when we're looking at AMC right here, we closed the day at $11.88, up 14.34% after a pretty miserable day yesterday. So this was definitely a nice bounce back to see. Now, again, we're down slightly in the after hours. At the time that I'm recording this video, we could always see a pretty significant run going later into the after hours trading period. But again, after a pretty significant green day, it does make sense to see a little bit of selling in the after hours from some of these larger institutions potentially. Now, when we bring this out to the 4-hour time frame here, again, we've been looking at the 4-hour a lot on AMC right now. We are seeing this 13 EMA start to bend back around along with the MACD crossing on the 4-hour time frame. Again, these are signs that we could be in for a reversal, but again, I'm not really going to be considering buying any calls until we get some closing candles above this 200 EMA right here, along with the MACD, the R, and the 1348 cross to the upside coming up. Sorry about that. So when we come over and check out look at the Ortex data over here, we've got 22.22% estimated short interest on AMC right now. Very high, increased a little bit today, 4.29% average cost to borrow, but the cost to borrow really stepped up today on the max at 7.94%. We haven't really seen these higher levels of cost to borrow on AMC in the recent past. And with the amount of shares on loan that we have right now, 166.93 million, basically 167 million shares, I would expect to see these cost to borrow numbers go even crazier over the next couple of weeks. Now, in addition to this, we have a net borrow of 576,000 shares today with 843,000 returned, 1.42 million total borrowed today as well. So these shares on loan number is going to continue to climb, further increasing the cost to borrow. Now, when we come over and take a look at GameStop over here, 27.41% estimated short interest, absolutely crazy. 328% max cost to borrow. This is insane. We're seeing 173% on the average and another net borrow of 696,000 shares today. Now, when we're thinking about some of the reasons why we saw this price increase on AMC and GME today, well, one, we could see something of a forced share recall. Now, I think a lot of people are a little bit confused by this concept still. Only the lenders of these securities, so an AMC or GME share, can then recall those shares, and they can do them at any time, like I'm going to show you guys in a couple of minutes. But it's not AMC, the company itself, that can do one of these recalls, if that was confusing for you. So when we're thinking about these recalls here, there was an article that I brought up many times in the past by a professor at the University of Notre Dame that when utilization is over 75%, there's a 1 in 26 chance every single day, or one time in every 26 trading days, that there is going to be somewhat of a forced share recall. So when we're looking at the situation that happened today, even though we don't necessarily see this reflected on some of these returned and borrowed shares today, it is possible that a lot of these returned shares were partially covered. And the new shares that were going out on loan, these 1.42 million, are just kind of going out on loan like we've seen previously. And we've seen this gap here, this 166.93 million shares on loan versus the 114 million shares estimated to be sold short. It's very possible that these shares going out on loan are not being shorted into the overall market, and we are seeing some level of buying pressure come in from these 4-share recalls. Now, when can these types of recalls happen? When we come over to this article right here from BNY Mellon, lenders can recall their securities whenever they want, for whatever reason they want, and they do not have to provide an explanation. All they need to do is ensure the request is made in good time so that we do not interrupt their investment life cycle. So it's very possible that these are starting to occur, especially with the high cost to borrow. Now, specifically on AMC, I do want to bring up a very specific point. We were seeing the shares on loan really start to climb up over the last couple of weeks and months, but we weren't seeing the cost to borrow start to increase. It's very possible that a lot of the shares that were going out on loan were going out on a fixed cost to borrow, which is possible for some of these larger institutions to get from some of these prime brokers. It would usually go out at a little bit higher than what the current rate is, just because of the risk of the cost to borrow continuing to go higher and you're locking in your rate. But now that the cost to borrow, the average cost to borrow is now double and the max is 7.94, these institutions that are lending these shares are thinking, hey, I could take these shares back. They have a fixed cost to borrow. If I take those shares back and loan them out at 7% or even 4%, double what it was previously, well, that lending institution can make a lot more money. But in the meantime, we're seeing these pretty significant price increases to the upside. Now, before we get into the options chain, I do want to talk briefly about this one hedge fund that is getting essentially its buy button taken away. Now, when we come over to this article right here, Bank of America and Citigroup have suspended all equity trading with Sagenti Capital Management due to the bank's concerns about the hedge fund's bets on the sale of large blocks of shares, according to several people with knowledge of the matter. This sounds very familiar with the Archegos situation when they were using a lot of these block trades to manipulate share prices of equities. The two banks have informed Hong Kong-based Sagenti, run by Blackpool Football Club owner Simon Sadler, it had been cut off from trading equities and other various financial instruments, according to the people. Bank of America has stopped trading in all financial instruments, while Citigroup has suspended equity trading relationships with the fund, but has continued to trade with it other products such as derivatives, such as options, or maybe even futures. The news of the moves by the banks to reduce their exposure to Sagenti, one of the most active hedge funds in equity markets in Hong Kong, comes as U.S. authorities have launched an investigation into block trading at several Wall Street financial institutions. So this is a pretty big deal here. They are essentially telling this fund, hey, we see what you're doing and we are cutting off your ability to make any more trades that, one, could cause a severe impact to your own fund and your clients and the bank itself, but to the system, the financial system as a whole. So this could be seen as a pretty solid step, in my opinion, in the right direction. Now, when we come over and take a look at Stonko Tracker here, I want to give this just a quick refresh to see what we have. So a lot of people are focusing in on the next monthly options expiration period. The amount of puts that were in the money today went down significantly by, I believe, about 30,000. So that is some unhedging that could potentially be happening. There's 208,000 call contracts that are out of the money right now. So there is a decent potential for these call contracts to run in the money, the puts to run out of the money, and then we start to see some more significant moves to the upside due to this delta hedging that the market makers have to do. Now, for this week specifically, the puts and calls are pretty balanced. There's a 4,000 difference between the calls that are in the money and the puts that are in the money right now. So I wouldn't necessarily expect to see anything crazy unless we were to see another significant green day tomorrow. But again, we have a couple of weeks before that June expiration date. And again, that June expiration date last year was pretty interesting with all of that open interest and that pretty solid gamma squeeze that we saw all the way up to 72. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I'll see you guys in the next one.